But let's shift focus to Metro Brands. And Metro Brands also came out with a strong set of quarter 2 numbers. We are joined by the management right now. We have Mr. Nissan Joseph, who's the CEO at Metro Brands, joining us this morning. A very good morning to you, Mr. Joseph. Thank you so much for joining us on ET Now. This is Cheryl on the other side. And let me just dive into a very critical question, and it's about the price hikes that you have already taken. Is there any impact on demand due to the price hike that you all have taken? And also, has there been any sort of down trading and a shift from premium products to mass products? And also, if you could shed some light on that, because, you know, usually when you take price changes, it does affect consumer sentiment, doesn't it?
Good morning. Well, I think there's a lot of questions there to answer. We've seen our biggest growth in the last quarter come from shoes that were over 3,000 rupees. When we saw actually a little bit of the share of business of shoes under 3,000 go down a little bit. So we're not seeing an erosion in terms of people trading downwards. We're actually seeing our ASPs in the higher range growing. And that's, I think, a reflection of the premiumization of India and the target market that we cater to. That's number one. Number two, don't forget we also had 2 festivals in there of Dussehra and Janmashtami that also tends to make people want to buy premium products. So we're not seeing that erosion happening in terms of customers trading down in purchase value. On the contrary, we're seeing our best growth come in the highest segment of our business. So that's number one. I think overall, I don't see an erosion in demand. What we are seeing though is we have lapped COVID now, right? So COVID last year probably got loose around September, October, and there was a little bit of pent-up demand that happened probably in the first 3-4 months of the quarter, first 3-4 months of COVID coming open. So what we are seeing is, we're going to start lapping those numbers, and we're going to come up with more national numbers and numbers that we can all make sense out of, as opposed to comparing it to 2 years ago and things like that. So compared to Q on Q, we're seeing the best growth compared to last year, at the higher levels.
Right, Mr. Joseph, this is Vinny joining in as well in the conversation. And, just want to keep it going then, in terms of inflation that we're talking about, what is the price hike, any percent that you could share with us that the company has taken in Q2? And are there any more price hikes planned in Q3 as well?
Yeah, so we've averaged between 5 and 7%, Vinny, in price hikes. However, we're seeing input costs stabilize. So that's been a big plus for us, that we don't think we're going to see any more anticipated spikes in raw material price increases. So we are seeing some stabilization of that going on. Having said that, though, the macroeconomic turmoil that's been happening has not necessarily gone away. So it doesn't mean we're immune or have got past all the potential price hikes. But for now, it doesn't seem to be as erratic as it was about 4 months ago.
Right. Let's talk about your EBITDA margins then, Mr. Joseph. And they've expanded actually on a year-on-year basis in the quarter gone by. But if you look at it on a sequential basis, there's been a contraction. One, could you tell me why such a contraction in a quarter-on-quarter basis? And will you be able to get back to that 36% EBITDA margins levels that we had actually witnessed in Q1?
Yeah, so I think, it's like comparing sales at a restaurant on a Monday night versus a Sunday night, right? In the retail business, we do have some seasonality that comes in with it, caused by not only the seasons itself, but also by the fact that in Q2, we typically run our end of season sales, right? So that is a big factor that happens in Q2, and it also happens in Q4 in India specifically. So those are the 2 quarters. If you look at the breakdown of quarters, Q1 and Q4 run about 25%. Q2 is our lowest quarter, running about 23% of the year, and Q3 becomes our biggest quarter, running about 28%. So, it is one of the lower quarters that we face. Having said that, though, I think our EBITDA growth over last year was 52%. So we are seeing some very good strides there. Our sales growth was 47% over last year. So we're seeing some very good numbers coming through. And as far as going back to the 36, we in Metro have always done in the 30 range, and we guide to that, and we're pretty comfortable that on an ongoing basis, we will be in the 30% plus range. It will blip up, it will blip down, but I think we're very comfortable with the 30% range when it comes to the EBITDA number.
Okay. Mr. Joseph, I want to talk about the share purchase agreement that you've signed for the 100% acquisition of Cravatax brand. Now, what is the growth opportunity? Could you just shed some light on that you see coming in over here? What should we be expecting in terms of growth here?
Sure. So I think the athletic space in India has been booming, right? So we all know both athletic sports and athleisure have been growing at quite a rapid pace. In fact, probably the fastest growing segment in the footwear business. So that's number one. Number two, we think it's important strategically in our portfolio of brands to have a global sports brand. So Fila fit that very, very well. It is a strategic acquisition that comes with Fila, and the Fila license allows us to sell Fila across the country in all channels, and also license products of Fila that we can create and make in India specific for India. So that opportunity is pretty immense. It's a strategic decision that we've taken to invest the capital allocation. The good news on the capital allocation is not coming out of debt. We're funding our own capital allocation on this project. We also don't think it's a magic pill that we're going to swallow and all of a sudden become Superman here, right? We know that we have to build that into our ecosystem, and everything Metro does is done with deep operational rigor and financial discipline. So we're going to build that brand. We're going to start playing in that space. But if you look at our portfolio of brands, the sports section, the sports category, has been a white space for us. We've not played in it. That's number one. Number two, it also gives us exposure to Proline, which is a very well-known brand in India, that we believe in the athleisure apparel space can have a significant legs. But that is also a business that is not in our current portfolio of brands and in our quiver of arrows. So it's things that we have to start dissecting. We first need to focus on integrating the two companies. And then as we do that, we will be putting together a roadmap on how we plan to unlock the potential of both Fila and the potential of Proline in India.
Actually, aptly said. Also, we've seen a lot of emphasis coming on sportswear and athleisure wear, given the fact that everyone was at home during COVID period, so they tried to explore that area as well. But talking more about this acquisition, Mr. Joseph, analysts have said that this particular acquisition is value accretive. So, what sort of an additional revenue potential can this acquisition actually lead Metro Brands to?
Yeah, so I think sports is a huge category. It's a significant percent of the footwear space. And it's a space that we've only dabbled in our Metro stores. We do carry Skechers and Adidas and Puma in our Metro and Mochi stores, but we've just dabbled in it. We've not made a concentrated effort into it. This allows us the ability to take that brand and build mono-branded stores across the country and take it to its level where the brand gets recognized as a critical brand for us. So we definitely think it's value accretive. Probably not in the very, very long run, but definitely not next quarter. It's not going to be. We'll focus on integrating the companies and understanding how we plan to fit that brand into our portfolio and layer it against the strengths that we have and leverage what we do.
Okay, Mr. Joseph, thank you so much for joining in with us this morning on ET Now. It's always a pleasure having you on the show.